Hello and welcome again to another episode of the Uranium Market Minute. Today is Tuesday, December 7th, and this is episode number 46. My name is Justin Hune. I'm your host, the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in. Really appreciate you guys being here. Hopefully everybody weathered that drawdown pretty well. I do think at least an intra-cycle bottom is probably in here. I know that was pretty rough for some folks. Hopefully you hung on, and if you were aggressive like myself, added to some positions, you're up pretty nicely today, although we'll have to see a bit of follow through to really determine that this is the bottom, but we'll do that. We'll go through that in the charts in a minute here. As always, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. Let's jump right into the daily scoreboard here and check out the numbers. Spot price of uranium coming in today at $44.75 a pound, mid-market, down about 50 cents a pound from yesterday. Seeing that spot price slip a little bit, with the Sprott Physical Uranium Trust still largely out of the market. The spot vehicle closed yesterday at a minus 4% discount to their net asset value, a little bit better than the previous close. And intraday, they've seen some nice moves. It's likely they breached that 1% premium to NAV. Did they issue any shares in the market? We'll have to wait for tomorrow, or at least later today, to find out. I'll let you know tomorrow. As you know, they need to be at more than a 1% premium to NAV in order to issue shares into the market. Over the last 12 trading sessions, SPUT has only taken in $345,000 new capital. They, again, yesterday did not raise any money because of that discount to NAV, nor did they purchase any uranium. It looks to me like they're hanging on to this unchanged balance of 32 million cash in their treasury. They're probably just holding that as a bit of a buffer until they can come back into the market in a much heavier manner once we see some volume come into that vehicle and give them the ability to raise a lot more cash. Reiterating, since the 17th of August, when their ATM went live, they've purchased 22.8 million total pounds of uranium and have raised almost $1 billion. Just over 3 months. And again, they're authorized $3.5 billion at this point. Turning to the sector equity ETFs, surprisingly, neither URA or URNM reported any changes in their outstanding shares. Actually, really surprised to see this. I figured due to the price action of both of these ETFs over the previous days that we would see day over day increased redemptions in their outstanding shares, but neither reported any. It's likely we'll see some tomorrow or the next day. I would be really surprised due to that lag effect if we don't see any further reports of share redemptions from these ETFs. Now that we're seeing things turn, it's likely by the end of the week we will see potentially even the reporting of some new issuance in shares. So all in all, the decline we've seen in the past few weeks has had very little to do with this reverse flywheel, with the ETFs having share redemptions and selling their underlying holdings. So it's been mostly, in my opinion, a retail driven sell-off, which is completely fine. The combined AUMs did decline by another 34.2 million yesterday, despite the sector stabilizing. Because of the pullback over the last 2 weeks, the AUMs of the two trusts have dropped by about 500 million since the November high print. Nothing, that's not insignificant. That's a decent chunk of a sell-off. We've seen these ETFs drop, I believe, by about 30% since the high print of November, coming right down near their 200-day moving averages. These two leading ETFs have a combined AUM of just under 2 billion. Let's go ahead and take a look at the charts. As I mentioned, the sector is getting a little bit of some support today. It stabilized yesterday with just about every stock in the entire space printing a nice reversal hammer candle. Today they're gapping up and moving up intraday. It's nice to see. Let's go ahead and take a look. URA bouncing nicely today, up over 7% on the day, gapping up on the morning open and moving up throughout the day. That's really, really good sign to see. Volume, nothing really all that spectacular in the volume realm here. So I would like to see heavier volume come in to really kind of confirm this reversal. Honestly, hopefully, I would like to see this chop a little bit more rather than just take off on low volume, because that would just be a sign for another reversal. So hopefully this kind of, that this was the low. I think that this is likely to be the low print intraday yesterday, about just above $23 for URA. We're seeing the indicators look like they have definitely reversed Could we see some sideways chop? Absolutely. In fact, like I mentioned yesterday, that would actually be a positive sign, in my opinion, at least for the health of the charts and the health of the sector. I like to see bottoming patterns take a moment before taking off. Usually, it means that the next up leg has a bit more of a base to launch from. It's usually more sustainable of a run up when the base is longer. And so I'd love to see this chop a little bit here. And I think that we might get that. I don't necessarily think this is going to be a V-shaped recovery. I could be wrong, of course, but I do believe this, this sell-off from the November high print in all of the equities in the sector, or let's say most of the equities, can't speak universally on these things, have put in a bottom for this sell-off. You know, of course, I could be wrong on that. We could retest those lows. We could come back down to the 200-day, but I think the overall weakness in the sector is definitely over, in my opinion. So, you know, we've seen some downside beta, as you know, the broad market weakness due to some fears in the market about a number of factors. It seems like those fears are starting to subside a bit as the broad markets are up nicely today. And you can see that the uranium sector and most resource stocks, commodities, have a lot of beta to the broad markets in both directions. I'm going to discuss that in the mailbag. Taking a look at the Sprott Physical Uranium Trust, again, a really nice bounce today. We've got an hour and a half left of trading today, and it's just about at the high print of the day. Very, very good to see. In fact, I would argue right now, because the spot price did tick down and the Sprott Physical Uranium Trust is up 4%. We're very likely just about right around that 1% premium to NAV. So maybe they are issuing some shares. Not a lot of volume happening here. So this is not institutions flooding back into this vehicle yet. I do believe that will be coming, and probably sooner than we all believe. But this, either way, it looks like the chart is recovering. It's very nice to see. Cameco looking similar to URA, up 6% on the day. That's a pretty nice move. Volume decent, but nothing really to write home about. Indicators definitely showing a bottoming pattern. So for the mailbag section today, instead of taking a question, I'm going to discuss something called beta. I've had a lot of questions around this, you know, come into me in the past few weeks, which is just in the broad markets only down, 50 basis points here, 0.5%. And why are the uranium stocks down 3, 4, 5%? That's beta. Okay. So beta essentially is, it's a measure of a stock or a sector's volatility in relation to the overall market. So if a stock moves less in terms of a percentage move than the S&P, the market, that stock's beta is less than 1. High beta stocks are those that move at greater percentage as compared to a broad market average, like the S&P. High beta stocks are deemed to be riskier, but provide higher return potential. Low beta stocks pose less risk, but also, of course, less returns. You can't get outsized returns without outsized volatility. Said that a million times. It's probably obvious, but it's worth repeating. How does this relate to the uranium sector equities? Okay, uranium has a very high beta to the broad markets. As we saw during the most recent pullback in the broad stock market, the uranium sector stocks, in terms of percentages, declined 2 to 3 times the percentage declines in the S&P. We'd see the S&P down maybe 1% on the day. We'd see the uranium sector down, most of the stocks in the space down 4, 5, 6+% intraday. There's a couple of reasons for that. One, resource stocks simply have a higher beta than most sectors of the market. They're inherently volatile. That's what attracts us to these stocks, because if we can nail the fundamental thesis, if we can nail the long-term trend for a sector, as we have so far with uranium, the upside potential is huge, and it's so much greater than just investing in an index fund or the broad market. 2, uranium equities have been stellar outperformers this year, and they corrected harder. When you have a sector that's done extremely well during a period of time, let's say year to date, like uranium has, when the broad market swoons, when you see some fear and some doubt come into the markets in general, you'll see the sectors that have performed well sell off more. There's more profit to be taken from those stocks that have done well, from those sectors that have done well. But you don't want to confuse beta with correlation. While resource stocks are not typically highly correlated to the broad market over longer periods of time, over short durations where the broad market hits an air pocket, they will tend to correlate with the broader market. What do I mean by beta in terms of the uranium equities? Okay, so this year, The S&P 500, for example, is up about 25% year to date, which is a fantastic year for the S&P, by the way. If you look at historical norms, that's a really strong year. URNM, the only pure play ETF in the uranium space, up 92%. Okay, so it's almost 4x the S&P. Our focus list portfolio. So these are the stocks that we have recommended to our members for the Uranium Insider Pro newsletter. Our focus list portfolio is up 143% year to date. So we have almost 6x'd the broad market. And so that beta comes at a cost. When you have these swoons in the broad market, you will see greater downside in these sectors that are highly volatile, especially ones that have performed extremely well year to date. But this is exactly what we're trying to do with this newsletter and what we have done extremely well so far. This has to do with the process that we have for choosing the stocks that we own. This has to do with the bullish call spreads that we've taken on these options trades that have really outperformed the sector. And it's really, I mean, honestly, that's the goal really of anybody, right? Is to beat the market. You want to have outsized gains relative to the market, especially in the year when the market is doing extremely well. You can buy almost anything and be in the green in 2021, right? But we've outperformed the S&P by almost 6x, and that's something really to be celebrated. And that's something that comes with a lot of time and a lot of research into the sector to find those best risk reward opportunities in the space. That is what we do. That is what we've done. That's what we will continue to do. And it's something to keep in mind when you see these swoons in the broad market and you see your portfolio deeply in the red and at a greater percentage in the broad market, then that's what you know is happening. You know that the sector has performed well. Some of the retail is going to take profits, especially with this previous pullback, which has not been on huge volumes. And like I mentioned earlier, that we haven't seen huge ETF redemptions. This is a retail driven sell-off. This is retail fears, which, you know, in some cases, this was justified. The sector was maybe a little bit overbought. Things started to get quiet, and you had fears come in about the Fed increasing the speed of their taper. You've had fears come in about the Omicron variant and the potential lockdowns of that. Now we're hearing news that the Omicron variant seems like it's basically kind of like a bad cold, and there haven't been any deaths yet from it. And, you know, that's just what I'm hearing anyways. I don't look too deeply into this stuff, but so it seems like you can kind of feel the fear dissipate, and then we see the moves in the markets. And the markets are going to be, I hate to call the markets a safe haven, but in an era when we're seeing, inflation north of 6%, what the Fed is admitting in real terms, in real life terms, we're probably north of 10% year over year in inflation. You're going to see an increase in funds coming into places where they believe that they can get outsized returns to beat that inflation and have a return on your money that will keep you afloat in a world with high inflation. So, and is that likely to continue? I believe so. You know, we'll see what happens. But for now, the fear feels like it's dissipating. And I think it's only a matter of time before we hear some more positive news come into the sector that will likely trigger some more funds coming into the space and institutions to continue to take their positions and to move this market forthrightly. Hence the 3.5 billion allocation for SPUT. Hence the Sprott taking over URNM. I think that this recent correction has actually been extremely healthy for the sector. I hope that it forms a bottoming pattern and just doesn't go V straight to the blue sky. I know there's a lot of people that probably watch this channel that are hoping for short-term moonshots. That's not why I'm here. If you're trying to trade in the short term based on what I'm speaking about in these videos, that's on you. That's not something I've ever recommended nor would recommend. So these kind of pullbacks, in my opinion, are a nice little reset. They let the sector kind of get some of that hot money, that late money out, get the tourists, let them bleed out and dump their positions and take the loss. It happens. This is how the market works. And so for us, this is very healthy. We were happy to add the positions on this pullback. So everybody that was selling over the last week, thank you very much. I bought your shares. And going forward, I hope that these discussions on volatility, on beta are helpful. And I will see you guys tomorrow. All right, take care. Cheers.